Good day everyone, my name is Viet from Axis Partners. Welcome to my weekly Forex Outlook. We had another great week with a lot of volatility to trade with. There was a lot of buying power behind the euro, particularly in the last 3 days. First of all, let me follow up on the pairs that were on my watch list from last Sunday. This is the Euro Canadian dollar on 4-hour chart. Last week, I mentioned about waiting for a retrace back to 1.4480 support level. Well, price did retrace there, and it also showed early signs of a long opportunity when this candle formed. I put in a buy order 10 pips above the high of the candle, stopped below the candle's low, and my order expired. I believe that price action on candlestick chart is time sensitive, and therefore time must also be a criteria for entry and exit. In this case, it saved me from a loss. Price went a bit lower before making its move up. It went straight through 1.4730 and finished the week right on 1.5 psychological level, which is also a resistance level when you look at price action from February 2014. I will observe what this pair does on Monday and use price action to decide if there is a trading opportunity or not. Euro New Zealand dollar was the other pair that I was watching for a retracement. On daily chart, Monday did in fact give me a retracement, but it was not close enough to support to give a trade. My definition of a close enough is 20 pips above and below the line that I put on my chart. Let me zoom in to show you. Here, this is the retracement, and you can see that both of these 4-hour candles did not close within 20 pips of the line. The next day, price broke support when we had a daily candle close below it. Then I saw a low risk, high reward opportunity to go short with the retracement. Back to the 4-hour chart now. My thinking at the times was support usually becomes resistance. So if I see signs of selling when price retraces back here, then I can get in to ride the recent downtrend that started on Monday. The next support level down is at 1.6430, so potential reward for the trade is massive. Even if I exit at halfway down, reward risk is still greater than 2. Opportunities like these are worth going for. Entry was at 1.6769 with a 51 pip stop, and the trade was stopped out in 2 candles. Now, this is an example of lack of discipline for me. On the completion of this candle, my exit criteria was met, and the trade should have been closed out right away. I was about 15 minutes late getting to my chart. I knew when the candle closes and that I must be present to access the trade, but I was late. The reality of trading is that you must be 100% disciplined at all times. The market will punish laziness, as you can see from our example. Let's take a look at the market ahead for next week. Australian Japanese yen on daily chart. This pair has closed below 89.40 support level. In fact, this is the lowest daily close since February 2014. If sellers continue to stay in control, then we could see price reach 86.30 support. I am already in a short trade on this pair. If I was not in the trade, I would short retracement back to this level. My regular viewers would know my trading method by now. I prefer to trade near support resistance because it offers protections for my stop. Now, I'm going to quickly go through the next few pairs just to show you that they are close to key support resistance level. I don't need to think about trading them because trades have already been taken by my automated trend following system. High volatility often creates trends, and when the market is trending, I take a step back and let my system do the work for me. We have Australian New Zealand dollar, which is now at 1.0920 support level. Below that, I have marked down 1.0750 as the next support level down. You can see that a downtrend pattern is unfolding. Price has made a series of lower highs and lower lows. If this pattern continues to progress, then price should go further than the last lower low. If it doesn't, then that would be the first warning sign of the downtrend coming to an end. Euro Australian dollar. The uptrend since May is very simple to see. Higher highs and higher lows. I got weekly resistance level at 1.5780, which is a long way up. If price gets there next week, then I would be very pleased since I have a long positions from 1.5123. Euro Japanese on daily chart. Prices close above 138.90 resistance. So if you are looking to trade, then price action is in favor of a long trade. For the aggressive trader, a risky high reward trade is on offer when market opens. Entry can be 10 to 20 pips above Friday's high, with stop below Friday's low and target at 141. Euro USD on daily chart. This pair is approaching 1.15 resistance level. Now, this is a key level that many traders would be watching. You can see why on the weekly chart. A weekly close above this level will invalidate the downtrend that started from last year because it would be a higher high. Finally, USD Japanese yen is at 122 support level. This is a key level that can be seen on the weekly chart. Previously, this pair had two attempts to break above this level, here and here. Once it did, it tried to break below this level a few weeks ago, but could not close below it. It's going to be very interesting next week to see how this pair turns out. Buyers could come in. Those who are looking to go long, this would be the opportunity they're looking for. However, if we have a weekly close below this level, then support will be broken and this could signify a large correction. The news calendar for next week is relatively quiet. Nothing on Monday. New Zealand has inflation expectations and trade balance on Tuesday. USD has quarterly GDP and unemployment claims on Thursday. And Friday, there is quarterly GDP estimate for the UK. I wish you another profitable trading week ahead in the market and look forward to have you back next Sunday. Bye for now.